Good morning. It is November 30th on Wednesday morning around 7 a.m. Eastern Time. Just going to run through the morning charts here, kind of recap what took place in the past couple trading sessions and what's kind of unfolding this morning. Now, if we take a look at this chart here, we've got the bar chart, the momentum bar chart. And what this shows us is kind of how overbought and how oversold the market is on a short-term basis. Now, if I just highlight here this blue box, anything above the 101 area, I consider the market to be overbought. Anything under the 99 level, right here, the 99 level, I consider to be oversold. Now, during more of a regular trading pattern, you can see down here where the range is much narrower. That's more or less a regular trading market. And then we got into the volatility where you can see it's just blowing through these ranges all the time. But it still works the same. As long as it's trading up above this 101 area or below the 99 level, it's still considered overbought, oversold. Obviously, it just stretches farther when it does go to those ranges. Now, on Monday, we saw the market have a huge push up, big gap to the upside. You can see this big move we had right here. Let me just... Now, if we just see this big gap here, put us into a major overbought area on Monday. Tuesday, we saw the market pretty much trade. It did have a bit of a gap up on Tuesday, but more or less the market's traded sideways, and you can see the momentum came back down, kind of neutralized that big surge up. Now, looking at futures this morning, they started to pull back a little bit, and China in the last about hour came out with some news helping ease liquidity. And that's actually helped surge the market pretty good this morning, but I'll cover that in a little bit later. But overall, this is just one indicator I wanted to just point out again, that it showed that the big gap up on Monday was showing the market's overbought, and Tuesday we're probably going to see a little more exhaustion come into the market and probably see a bit of a breather, which I pointed out in the morning, and that's pretty much exactly what we got. Now, if we take a look at the stocks trading above their 20-day moving average. I pointed this back out on Monday also. What I'm looking at here is anything trading above the more or less 80% level. When 80% of stocks are trading above their 20-day moving average, I consider the market overbought. Usually when 80% of the stocks are trading over their 20-day moving average, everybody's making money on the long side. It's the crowded play, and eventually you'll see the big money start to roll out, and then you'll see the prices fall back down. Now on the flip side, anything below the 15% level, so when only 15% of stocks are trading above their 20-day moving average, it means most stocks are in a pretty sharp downtrend, and it's actually the crowded play. Everybody's actually short or out of stocks, and it's about time that they're probably going to bottom. Now, what I want to point out here is most times when you see the market come down to this level, you see it kind of grind down for several days, and then you get like a nice pop, and then you get a little bit of a pullback, a couple-day pullback. You can see we had a push right down deep into the zone, had a pop for a few days, and then it pulled back down. Same with over here, it came down into the zone, had a pop, came back down into that zone before it rallied. And that's kind of where we stand right now. We've seen it come down, it's been grinding into this lower level, and what we've seen now is we've got this pop. So the question is, are we going to get this first pullback in the next few trading sessions before the market actually starts another rally? And usually what this is usually the market comes down, it becomes oversold, and then finally you have a short covering rally, and that's when you get that first kind of pop. It lasts this one kind of surge up here. It lasts a few trading sessions, and it's everybody covering their shorts, and people trying to pick a bottom, starting to go long. So you get that first jump, but because it just came in such a big downtrend prior to that, so many people are still bearish that they're going to sell into any bounce. So when you do get that first short covering bounce, usually you see sellers step back in and push prices down one more time to see how weak or strong the market actually is, and then from that point, that's usually when you see the market flush itself out or do a double bottom, and then we see equities continue to head higher. So that's kind of where we stand right now, and we've had a couple big gaps to the upside the past couple trading sessions. So there's some big gaps to be filled back down near the lows, which makes perfect sense for hopefully this scenario to play out and provide us with a long entry point, which could give us a nice little kind of rally into Christmas. Now, if we take a quick look at the U.S. dollar index, see how that's unfolding through the night. Just going to zoom in a little bit more. This is the 60-minute chart. Pointed this out yesterday morning when we were starting to get. We came up into a key resistance zone. The 79.50 area was my key resistance from in October. Anyways, we had a nice surge to the downside, breaking a couple previous pivot lows. We had an impulse wave to the downside. 1, 2, 3, 4, 5. So we had a 5-wave correction. Just before the open yesterday, we saw the U.S. dollar go into a straight plunge. I pointed out, it's a nice controlled 5-wave pullback, and we'll probably see it try and put in a bottom. And it pretty much did yesterday morning. We saw it have a nice recovery, traded flat for the rest of the session, and then last night and this morning in pre-market trading, it's had a little bit of a hiccup. Tried to move up, came right into resistance, it kind of got stepped on, came right back down, and it came down mostly because of the China news and this quick downdraft in the U.S. dollar in the past hour. Actually, you'll see a big surge in equities and commodities with the U.S. dollar getting stepped on here. But overall, the U.S. dollar is trying to put in a base here and work its way higher again by the looks of it. It's just these headline news that came out of China has caused a blip in the radar kind of here. Let's have to see how strong that move is and if it's just a blip or if it's actually going to help continue the trend for the equities higher, and we'll actually see this news out of China put pressure on the U.S. dollar. So looking at the futures chart, we've had that really nice pullback in equities into this kind of falling wedge, and then we've got this snapback rally. And this morning we're seeing with this U.S. dollar here and China move, we're seeing equities actually move quite a bit higher in pre-market trading. We're up about 1%, just about 1%, but from the lows this morning, because yesterday the equities market closed right about here. So we're only up about 1% from there, but we're actually almost up 2% from the low of pre-market this morning. This was a pretty good surge to the upside. But overall, just looking at this chart kind of really quickly here, we kind of got a bit of a broadening pattern. We are coming into a resistance zone, and this morning, if the market opens where it is, it's going to be overbought. And of course, remember, we do have some gap windows, big ones down here to be filled. So there's still a good chance that this buying is going to get sold into. We could see another sharp test for a double bottom, and that's kind of where I'm standing right now. I don't really want to jump in and chase this trade when it's already had a nice surge to the upside and it's overbought with gaps. Now let's see this weakness in the U.S. dollar in the past couple hours. Take a look how it's affected commodities. Here's the crude oil chart. This is the 4-hour chart. So we can zoom back about 3 months. And you can see crude oil's just been stair-stepping its way up here the past few trading sessions, and it's working its way right back into this resistance zone, which is the $100 level per barrel. If it can break through there, might see a spike back up, put in a double top. Most likely it'll pull back down at least to the $100 area. We've got to see how this is going to play out. It could form a nice little cup and handle here, eventually break out to the upside. But really that's going to have a big role in what happens with the US dollar index. I still feel as though the US dollar index wants to go higher. The weekly chart is extremely bullish, and if the US dollar continues to run higher, we're going to see crude oil. I'll probably put in a double top here and come back down sharply in the coming weeks. Looking at gold and silver, here's the 4-hour chart of gold, and you can see we'll drop off this morning in the gold price, and then we've seen it have a recover back with that drop in the US dollar. So everything's just kind of chopping around. The headline news is definitely swinging prices. We've got a very jumpy market still, and got to be cautious. Overall, I'm more or less kind of neutral on gold right now. And today I'm going to do this evening I'm going to do a big picture kind of analysis of what's unfolding with the US dollar, gold, and equities. And it's not a really pretty picture, but if you know how to take advantage of it, and we get these moves like that the charts are pointing to, we can make a lot of money in a falling market and stuff. So I'm going to cover that tonight. Looking at silver, here is the silver chart. It continues to just trade sideways here to down. Nothing. It doesn't. It looks more bearish to me than anything. The volume spikes are more or less sellers. And we've seen a drop in price. It's gone sideways. It looks and feels as though it wants to do another drop, probably down to test somewhere around these lows here, this mid-range, down to the 30, if not even down to the 29 level, where it will find support. If it breaks this level around the 29 or so, we could see it go sharply lower. Just zooming out on this chart, and I'm going to cover this tonight in a big picture analysis, but if you just look at the silver chart, it's not really that pretty. If we see the US dollar continue to take off, we've got this bear flag. We're looking back down at $22 a barrel, or $22 silver, if that unfolds. Now, I'm not saying it's going to, and I'm not trying to be a super bear here, but when you see the big picture stuff, you're going to realize that it is possible. Got to be very cautious with what's going on, and I'm going to cover that tonight in my big picture report. Now, looking at the SP 500, I'm just going to pull up the daily chart just so you can get a feel for kind of what's unfolding on the daily. Here we've got that falling. You can't really see it too much on a daily chart, but there was the falling wedge here. And we've got that nice pop in price. We've got a couple gaps to fill here. We've got this gap window here that still needs to be filled. We more or less have a big gap from Monday. So we've got a couple gaps to fill, and this morning if we get a nice gap to the upside again, we're going to see this gap, which I thought was going to get filled yesterday. We might see it get filled, so we might see price push one more surge higher here, maybe trade sideways for a day or so, and then it could come right back down and fill these big gaps. So we got to be very cautious of what is going on, and the fact that we have this day here where we had about 39 buyers. By the end of the close, 39 buyers to every one seller. That just shows everybody piled in. It was a short covering rally, and this momentum, I think, is going to probably stall out today, and could see equities pull back. Now, taking a look at the futures chart, the SP 500. Actually, you know what? If I just show you the SPY ETF, the 10-minute chart for the past couple trading sessions, you can really see. You can really see these price gaps, and gaps are really important. Here's the big gap we had the other day, so there's huge room for the prices to fall. We've still got this gap to fill here. We filled about half of it yesterday. This morning, if we get a strong move up off China's news here, it opens higher, we could see this gap filled, but overall there's potential for a surge up and then a refill, a back test of this gap here. So looking at the futures chart of what's unfolded, here you can see on the hard right edge here, we've got that big surge in equities. Literally just went straight up in 30 minutes. We saw the SP 500 surge about 10-12 points. And that's simply off the news of China. It just pierced the previous pre-market highs on the futures chart, which is normal. Usually you see them pierce, and it actually runs the stops, and then usually you'll see the market roll over. So the question here is, usually when news hits, you get news that people are following or surprise news. You get these big spikes to the upside. They happen very quickly. Generally, news comes straight back down and gives back, if not half, all of those gains. So that's what we're kind of waiting to see, is how important is this news out of China that they're easing liquidity and going to make it easier for people to more or less spend money, get money. So that's the big question right now. And right now, just looking at it, I would say, because it's just a news headline thing, it's pre-market, that we've come back up into a double top here. I have a feeling it could get sold back into, but again, got to see how it plays out in regular trading hours. A lot goes on futures. There's a lot of manipulation. Prices can move much easier when the real traders step into the market. The volume, the masses at 9:30 to 11:30. That's when we see what the trend is and how the market reacts to it. So, anyways, that's it for this morning, and I'll talk to you in a little bit. Bye bye.